Welcome to the Trading Lounge and the Day Ahead Report. And look, there's not a lot of change in our analysis of what's unfolding, and we'd be looking at it in terms of a three-wave swing, in terms of an A and a B and a C wave here. There's a very clear five-wave structure down through here in the S&P 500, and that would also reflect into the look, most of the other indices, the FTSE, the ASX, so forth, the Dow. So we're looking at a B wave at the moment. The tricky thing with the B waves is that, well, normally they're really quite simple. They're in three waves. So there can be three waves in this one here, or these little three waves here can make up the small A wave, then the B, then the C. Kind of expect the worst. Kind of expect a complicated correction here, because in the sort of guidelines, I guess, in Elliott, there's sort of a guideline of alternation, as you know, in waves 2 and wave 4. If wave 2 is simple, then wave 4 will be complex. That's the same in corrections as well. So if the A wave down here is simple, then it's best to expect the B wave to be complex, and then the C wave will be simple or more complex. Our main trading strategy really is to, allow the B wave to unfold, and also the C wave. We can short the C wave. The C wave the A wave is normally sharp and quickly to the downside. The wave C here is normally on a more of a slower an angle. So the slower this comes down, the better. And the more angle that it comes down on, the better as well. If it comes down sharper than the A wave, then we've got a mistake happening, and we would be looking at this as down for 1, back for 2, and then down for 3, so to speak. But as it stands, we will be just focused on this as the ABC correction. And one of the reasons for that is that we can see this happening in stocks. So there's a lot of stocks that are at top of third waves that need to fold into their fourth waves. So let's just see how this unfolds. But our main thing is to just to trade lightly and work ourselves through this here. The Dow Jones is just the same as well. It's at 14,000 in its rally. So being at 14,000 is not going to go very, not going to go much higher in the short term. As I mentioned, Europe's pretty much the same as well. This is the FTSE here. So we're looking at the A, the B and the C wave down through here, working across the 6,300. Same with the Australian market as well. Let's just have a bigger picture here. So, this first swing lower here in 5 waves. So we're looking for an ABC back up here in a B wave, and then a C wave to the downside. This is a correction unfolding across the 5,000, and this is, the first part of it here. So, it's important not, if you've made money in a trend, you normally give it back in the correction because you become, attached to it. So it's best to, if you've got that attachment, then just trade less and trade smaller trading ranges and so forth. Let's have a look at the commodities. Okay, looking at copper here. Let me just move this off. We're looking at this wave count coming down, and look, our target, as you know, was the 350 area through here. So we can expect that to come down. The resistance, the support rather, will come in at 353, the little group one above that. So that's sort of where it is now a little bit. But yeah, look, it's either going to bounce from here or bounce from here further. But we can start expecting, we've got a series of waves 1s and 2s in here, and obviously this is the third wave coming down through here. So we can expect waves 4 and 5 to be bouncing around here for a little while as well. So this should offer some support into the materials sector. In the materials sector, we've been sort of looking at BHP. This is BHP here, so daily chart, just to go over this a little bit. We were looking at this particular structure coming up through here. So I'm just going to run through that a little bit, because we can look at it in 2 ways, and we have to look at it in 2 ways as well, because well, we just have to, I guess, until we've can confirm a certain point. So we can look at this in terms of an ABC correction up. So an ABC correction would be like this in 3 waves, and in this case here it's a little bit longer in the C wave, if that's going to be the case, and that would be the A wave to here, the B wave to here, and the C wave to here, and the C wave's always in 5 waves, so we'll put the 5 little waves in there. So that would basically be to here. So that there would be the A wave, the B wave, and that's a corrective. Once that's finished, then that will roll over, and that's what we're talking about. So we had the A wave to here, the B wave to here, and then the 5 waves up are up for 1, cross for 2, up for 3, 4, and 5, and we're talking about that up through here. So that's one possibility. So, you know, that could move further down through here as such. So we've got to be mindful of that. So we expect to bounce off the 36 there in both cases. So that's a real possibility. The other possibility is that this move that we've got to the upside here so far can turn into a 5-wave structure as such, like this here. And that's a real possibility as well. So at the moment, this move down through here, this is the cloppers leaving BHP as such. Well, they're all leaving, aren't they? You know, for all different reasons. In the mining sector, probably need in expansion. You probably need people that want to grow the business, and in contraction, you want to be sort of getting some penny pinchers in there. So, but look, anyway, if we can get this 5-wave structure here, then this is actually a really positive story. So, in a 5-wave structure, this here at the moment, this would be up for 1 here, back for 2, the 5 waves up for the top of the 3rd wave, the 4th wave unfolding through here. Now the 4th wave is interesting because, as you know, and this can be applied to the other markets in the ASX as well, and other markets in general. So it pulls back 38.2%. Of the 3rd wave, and that's it there. So we'll be looking at $36. The other aspect in looking for the 4th wave low is pulling back to the 4th wave of 1 lesser degree. So this is the 3rd wave here in 5 waves, and this is the 4th wave of 1 lesser degree. So we'll be looking at the 36 mark here as well. So if we were looking at a bullish scenario here, then we'd be looking at some sort of, you know, ABC correction in here. Well, in fact, wave 4s can get quite complicated. So, especially when wave 2 here is simple, the alternating situation would have wave 4 here is complicated. So we could get triangles, we could get double zigzags, and so forth. But essentially looking for a corrective pattern there. Now this is a little bit tricky to count up here as such, but if you look at Rio, it's got a bit of a cleaner wave count going to the upside, apart from that spike there, but just ignore the spike there as such. So here we can see from the low here up for 1 and back for 2 here, and then the 3rd wave. So basically the up for 1, there's 5 little waves in here for 1, an A and a B and a C for 2, strong 3rd wave in 5 waves, the 4th and the 5th wave here. So that's pulling back probably for its 4th wave, and as a 4th wave that would be in line with what we're looking at with the S&P 500 and so forth, and then we'll see further movement to the upside there. So that's what we're looking at. When you can look just while we're here, while we look at other stocks that are quite simple to view as well. Much the same thing with Bendigo Bank here as well. So we can see just from this point here, being this the 3rd wave because it's the strongest, we can see up for 1 and back for 2, and then the whole 3rd wave here and possibly the 4th here, which would be unfolding across the strongest number here, number 1, trading level 1, $10 here. So it will vibrate across here before we see any upside, further upside here. So that's the general picture that we're sort of looking at. And as you know, with the S&P 500, what we've been talking about is we're looking for that ABC correction in the S&P 500, and we're currently in the B wave here. So we've still got more of a correction to look at here, but coming back to copper here and other base metals, we can expect some sort of support here, but the trend is clearly down, because when we look at copper in terms of base metals, let me just get it here. Looking at the LME copper here, you know, we were talking, you can see that it's moving down through here now, and it's moved through the 8,000. Remember, we're talking about that. We're speaking of this being a top in here, and we're also, you know, speaking of the copper market here being a triangle pattern as well, an Elliott triangle, which is always in 5 waves. So 1, 2, 3, 4, 5, always diminishing into the 61.8 relationship, but also here being the major trading level 8 here as well. So, you know, once this, we take a bearish stance on it, but, you know, once this becomes a tested resistance here, then we can expect further downside here. And yeah, so that's pretty much it. As that's retest, it may drop further to this point here, whatever, but once it's retesting this, that will reflect in the 3rd, 4th waves on the US copper as well. They both have the same pattern, by the way, of course. So, but yeah, just watching those unfold. So that will weigh heavily on the material sector, and where that will weigh heavily on the material sector, if I just go back again to BHP, sorry to spend so much time on this, but just bring in here. So the real problems can be in, so of course this is BHP again, so this can be an ABC up here, and that could be finished, and we could be rolling down from here. So that's a real possibility, and we'll work that out as this correction unfolds here, and what happens in other markets as well. But even, you know, once this 4th wave here completes itself, let's say, and then we go up for to wave 5 here. Okay, if that's the case. If that's the case, then this wave 5 here will be the same length as this one here. So it's really just going to pop its head above the 40 there, and then it's going to have a larger correction at this stage. So once you've got an impulse to the wave to the upside, if this is going to be the case, if we've put that in there somewhere, an impulse wave up there, then the ABC correction will pull back 61.8% back down here to obviously where the volume support is down through here, so between the 50 and the 60. So we would be seeing back down to 34 there, Fibonacci number there. So that's where that stronger correction can come into play there. So just expanding on that larger picture there. For the gold market as well, the gold and the copper are pretty much sort of falling in line here. As you know, we've been, you know, rolling down through here, and we're considering this a wave 4 here, and the wave 4, we're looking for it to come back to 15 sort of 90 here, so that could certainly be the end of the correction through here, but this is also the wave 4 of 1 lesser degree up here at 1618 up here. So that's an important thing to understand, that this market can go an A and a B and a C here, retesting the 1600 here. So that's a concern, because we've been short here. So the next step is what to do at this stage here. So this group 2 here plays an important role here, and the most important number in here is the 1572 here, and so that as support would create a bias to the upside. The next trick here is to see the 1580 on support. So if this gets onto support here, you know, moves up through here and comes back and tests it and then starts to move off again, then we can be pretty much assured at that time that we're going to be looking at higher ground as a retest of the 1600 there. So as I said in the beginning of this, that if the group 2 here becomes the support, then you need to reduce positions here. And as we can see at the moment, with this market's moved back down here to retest the 1572 here, and it's tested as support. It hasn't actually fallen through here, has it? It still may do that. It may fail to find support on here, because this could be down for 1, back for 2 here, and then down for 3 here. So of course, you've got to sort of, we live and die in our lanes and make our own beds and all that sort of stuff. But as far as I would see, that this has tested this as support, it's held here as support here, so it's a time to reduce position sizing here, be it 30%, 50%, 70%, or 100%, because if this becomes the retested resistance again here at 1572, then you can add to the position there as well. I definitely like moving in with smaller positions and building trades and unwinding trades. So, but this is certainly a reducing point at this stage here. But we do still see this as a corrective move here, and it might be easier to see in silver as well. So, in silver here, we've got this. You can see you've got a strong trend down, and this is a corrective pattern here. If I just bring that up a little bit here. It's a corrective pattern because it's got overlapping wave structures within here. So once again, it may test the 29 here, but eventually this will roll down as well. But once again, too, if this finds support on the 28.72, then you want to be reducing at this at that point there as well. The 28 is going to see a bounce, as I mentioned before, as it does move lower. So yeah, look, but this is what was expected as well. As we're coming down into this trend now, we had our down for 1 and back for 2 and 1 and 2 and 1 and 2 and 1 and 2, and then that subdivides, and then the third wave unfolds, and now we're going into the waves 4 and 5 zone where we're going to have shorter moves to the downside, and just a strong rallies. Now the idea is to stand way back and allow this to unfold, or to manage the position. But I think you really need to be taking some money off the table, so to speak, to lessen it. So with trading, you basically see the setup, you scale on in, and you move in with it, and then you capture the most of the move, which we did, and then this is the time to sort of leave some in there, but basically, take some out as well. Protecting the assets, the first rule in investing. Right, so the oil market as well. Oil's going to follow stock, so it's going to follow the S&P 500. So the S&P 500 is rallying for the wave B at the moment. So oil will be doing the same as well. I can tell you that this is a little fourth wave here and a little fifth wave here. So we'll see some sort of A, B, C up here, and then eventually failing and moving down. But in terms of trading, while it's above the 93 there, or above this particular low here, then look, I wouldn't really bother with it at this stage. Let's allow the S&P 500 to fully unfold into its ABC, and then we'll look to trade everything to the upside. All right, let's have a look at FX. Just starting here with the euro. Look, it's important to understand that the S&P 500 and the euro, normally has a correlation, half an hour chart, 1 hour chart. They need to be sort of correlated. So the S&P 500 is going through that ABC correction at the moment. It's going up in its B wave, and it is dragging, has dragged the euro to the upside as well. It does appear that there is a little 5-wave structure in here that's obviously not sort of complete just yet, but once it is complete, we could call that the A wave, and probably some sort of smaller ABC correction across the 132 there, and then up for the C wave here to the fourth wave of 1 lesser degree, and then we should see a move down as the S&P 500 moves into its C wave. Okay, so just try and match those guys up a little bit. The flip side to this would be the US dollar here as well. So as that ABC is rallying in the euro, that's what we should see here as well. So we were looking at this being a little third wave, a little ABC here for the fourth, and a little 5-wave structure up for the fifth here. So we need to assume that this is going to be some sort of A, B, and C down to here as well. But once that's complete, then we could see that to the upside. The euro is actually sitting on a weekly trend line down through here as well, so there is going to be that support there as such. So yeah, look, just be a little bit mindful at this stage. The good trading will come once that S&P 500 has completed its B wave and C wave. Then we can move in, because then we'll be looking for a trend at that stage. So just a little bit of patience for these markets to get set up in the next sort of larger degree of structure. The Australian dollar is in a bit of a tricky situation for us in terms that there's 2 wave counts, and you can see them on the intraday charts in the Elliott section as such. Now we can have this as wave 1 down to here, so we would have the A, the B, and the C for wave 2 here, and then this would be down for wave 1 here and back for wave 2, completing here, but we'd need to see it move down, straight down from here. This particular number here would be really important to do any shorting on, so the 102.72 would need to become the retested resistance for short trades to come in on that side of things. The other scenario is that that we haven't finished our wave 2 rally, and we'll be seeing it going higher up there. And if that was the case, then we would be looking at this as up for wave 1, an A and a B and a C for wave 2 here, and then up for the third wave, the fourth wave, and the fifth wave. So 1, 2, 3, 4, and 5 up, because when we look at the bigger picture, the 104 is the 50% retracement level for wave 2, and the 61.8 retracement level is somewhere up around the 140.50 area up here. So anywhere up here is plausible. So the thing is to trade the levels. So if the 103.30 here becomes the support, then you can trade long from that point. If the 72 becomes the retested resistance, then you go short from that point. That's the outside. If this continues to create like an A and a B and a C in here and drops below the 103 here, then climbs back up here and starts moving up through group 1 here, then you can scale in long from that point, because the move up here would be quite strong in terms of a little third wave moving up through there in terms of wave C. Which would also there's another count for this as well, which is the A wave to here, the A, B, and C wave for the B wave here, and then the C wave up through this wave. So there's a couple of ways this can be counted, but you just need to play it by ear as it unfolds until we've got ourselves into a more sure sort of position and structure with this as well. So look, just trade the levels. If you have been short in this market, well, then the natural thing to do is that if the 72 here becomes the retested support, which it was here, it hit the 3, then retested here, and then moved up from that point, then you need to cover the shorts at that point there. That's what I would do. In fact, I would be reducing shorts or exiting shorts on the breaking of the 72. But you know me and the 72 number, a bit nutty, but there you go. All right, well, that's it. So just sort of recapping, the most important thing for us really is in the week ahead is looking at that ABC correction in the S&P 500, and if it plays out according to what we think it's going to be, then we should have some nice positions to the upside. So we just need for the wave C, the wave B to complete, the wave C to the downside, and then we need to look for some long trade setups from that point there as well. So look, just a little patience until we get through these swings. Alrighty, I think that's it. So good morning, good luck, and enjoy the day ahead.